So in this video, we are going to dive deep into pit numbers, right? So pit numbers is a term, right, that we really don't hear much of in the day trading industry, right? Pit numbers represent four main critical levels. And today in this lesson, we're going to break down what they are, where they come from, why I use them, right? Because there's so many reasons why I use the pit numbers, but I really want to break down and really flesh out the importance of what makes them work, right? So the main purpose of this video was going to be to target to really help traders learn to target levels and entry levels, right? Because it's very important to be able to understand, okay, where do I want to get in the market? Where do I want to get out of the market, right? What makes sense? What's reasonable? But then as I started thinking about it, I was like, well, more or less every single trade I take is either A, off of a pit number, or B, targeting a pit number, right? So today in this lesson, I really want to flesh out pit numbers, where they derive from, and why they're so important to me, right? So for this lesson, I'm going to be using SPX, right? These obviously they work on any commodity, right? They work on any commodity. Futures not so much, because futures never end. Futures are 24/7. But if you're going to use pit numbers, I highly recommend using them on commodities such as SPY, QQQ, SPX, Apple, AMD. It doesn't matter, right? Because it doesn't matter the commodity, the principle is what matters, right? So the principle behind the pit number is very simple, right? So when I first started focusing on pit numbers, right, I'm going to tell you guys, it started from trading the gap fill, right? So what is the gap fill? It's a very simple strategy where price in pre-market creates a gap, right? So you can see right here we got a little gap from the previous close. The previous close is a pit number, right? We call it end of day. So in this scenario, I would take my little line, I'd put at end of day, right? So this would be my pit number, right? My next pit number would be open print, right? So now open print's going to be right here. So now you're going to get yourself a little scenario where price is gapped up in pre-market, and about, what is this, about 20 bucks to $15. So now you have to ask yourself, right, where does this gap come from and why is it important to me, right? So the gap fill strategy is very simple. Basically, in a nutshell, throughout pre-market or post-market price action, price has now gravitated either higher or lower than the previous close, right? So to really understand the market, you have to understand the auction aspect of it, right? So what that means is, for every transaction that happens in the market, there has to be either a buyer or a seller. There has to be both of them, right? They both have to agree on price, right? So it's a transaction, it's an auction, right? Much like selling a car, much like selling gum, doesn't matter what it is. You are agreeing on a price. There's a buyer, there's a seller. Okay, so now what does that have to do with pit numbers? Well, pit numbers are areas on a chart where there's higher than normal amounts of volume, right? So liquidity moves the market, right? Large money, the banks, the institutions, right? They push price, right? And they generate what we call liquidity, right? So basically what liquidity is large money has a bunch of gum, right? They want to sell a bunch of gum. But the only thing that makes the gum valuable is the fact that the buyer wants it, right? So the buyer is liquidity, right? Liquidity in the stock market is basically a bunch of retail traders. It's a bunch of other people taking the other ends of large money's trades. So when you get a spot like end of day, right, that has massive amounts of buying or selling volume at it, right? Every single day at the end of the day, there is mega amounts of volume, right? So any single time you get an area on a chart that has abnormal amounts of volume, this area is going to tell us, it's going to paint us a picture, right? Because the market, when we sit here and we look at all these candles, right, we get all these candles, we get these chart patterns, right? And it's our job as day traders to understand these chart patterns and make moves off them, right? So when we see chart patterns, we're literally going, okay, this is this is a bullish break and retest right here, just off this previous level, right? So here's a little level right here. We've broken above it. Now we're retesting it. This is somewhat bullish. If buyers can hold this, this chart pattern represents a higher probability of price going higher, right? That's our job as day traders, to identify chart pattern. But what a lot of traders don't know is chart patterns represent human behavior, right? Like anytime you see a bullish chart pattern, you're literally viewing the collective mind, the wholeness of the stock market. Everybody is participating in that way, whether it be bullish or bearish. You're going to see a chart pattern, right? So it's our job to understand these chart patterns, right? And you could trade chart patterns off any level, right? But if you want to understand the whole context of the market, the story, who's in control, and make the highest probable setup, it only makes sense to identify these chart patterns off a pit number, or what I like to call a critical level. A critical level is just an area of value with higher amounts of volume. I get a lot of questions, right? If I trade pre-market low, if I trade pre-market high, right? Those are critical levels as well. Why? Because they have a lot of volume there, right? There was a significant move at a level. I want to see it. But the pit numbers, right? These are what I want to use for my targets, for my entries, for my exits, right? Because a big issue that we go through as day traders is, holding trades, getting in trades at the right spot, right? So why not develop a very simple, repeatable approach to the market where it doesn't matter what happens today. It's only going to be my job to react off the chart patterns at the pit numbers, right? It's a very simple approach, right? When in my beginning years as a trader, right, I used to show up to the market and I would get, tons of anxiety. I would overthink everything because, there's a lot of variables in this game, right? And it's up to us to minimize those variables and make higher probable decisions off them, right? So let's go back to the gap fill. We get a gap fill here. This is what price looks like. So in my mind, the way I'm going to view this, right? We got open print right here. We have end of day. So there's two scenarios that can happen here based on how the auction works. What does that mean, Josh? Well, what that means is end of day right here has tons of volume and liquidity, right? Just like we were talking about. Now, open print has a lot of volume and liquidity as well. So there's two general scenarios I want to focus on. Obviously, there's billions of things that can happen, but that doesn't do me any favors as a trader. Instead, I'm going to focus on the two main, most highest probable scenarios that can happen, right? And then I'm going to allow price action to dictate which one I trade, right? So what are those two scenarios? Well, A1 is the gap fill, meaning this gap in pre-market gets filled, right? And the way it's going to get filled is by sellers invalidating open print, taking price down below it, coming up for the retest here at open print. This would be my entry short, targeting the gap fill, right? So this is how this strategy works. What sort of chart pattern is this right here? This is a bearish break and retest off open print, right? Bearish represents selling. Critical level, open print, represents large money that's going to end up moving the market a certain way today, right? And we're going to use that chart pattern to make the decision, right? So that is how the strategy works. And now, okay, sellers show up at open print. Instead of just going, oh, short the market right here and let's see what happens, I'm gonna go, no. The highest probable decision here is, or scenario, is that sellers defend open print and take price all the way down to end of day, right? And that's literally what happens. Once we start to break that 50, you can see we get a very strong move down to end of day, right? So now, once again, let's revert back to the pit numbers. So say you missed that trade in the morning, right? So say you missed this, you were late to the market, you were walking your dog, you were making a sandwich, doesn't matter, right? What would be the next trade? Well, let's identify the next critical level, right? So the next critical level here is previous day low, right? So previous day low, let's look at it right here, is right here, this guy, 5444, right? So previous day low is the lowest price from the previous day, right? Why is that significant? Because at one point, sellers were in control of the market right here, right? Check it out. They pushed price down. But once price came down to this level, buyers said, nope, we're not letting the market go down any further. So instead, we're going to push the price back up, right? So this will give this level significance. This is the lowest price sellers could bring price to, which A, tells me sellers were interested in pushing the market down, and B, buyers were interested in this level. That serves two purposes. First purpose is if I short this market, I'm going to be doing exactly what these sellers were doing yesterday, right? Which tells me sellers were interested in this movement. And then B, it also tells me if I do short the market, or I'm currently in a short, this would be a great spot to look to take profit, right? See, a lot of traders, they trade, but they don't understand the dynamics, the precepts, the principles behind price action. And it's so important to learn these things because it's going to help you execute the way you need to execute, right? Instead of just hopping in a trade and going in straight survival mode where, you know, you're only using the right side of your brain, you can't focus right? Why not approach the market with a very simple approach using the pit numbers, right? So now the second trade would be, okay, the gap fill was filled, right? Now, what this tells me is that sellers push price down to this critical pit number called end of day. So now let's refer back to the process. The process is to identify large money controlling this level. That doesn't mean I'm assuming buyers are going to show up. That doesn't mean I'm assuming sellers will show up. All what that means is I need to be cognizant of how price reacts at this level. And all that is a pretty way of saying I need to identify a chart pattern at the level. Chart pattern at the zone. Chart pattern at the pit number. This will lead you. This will guide you, right? And this also keeps you in the present moment, right? So a big issue I had in my early years as trading is I was constantly trying to predict things. When you're trying to predict things, you're not in the present moment. When you're not in the present moment, you cannot make proper decisions. Your brain isn't registering the information properly, right? So it's up to us to remain grounded, right? So that we can make the correct decisions based off the information in front of us. Okay, so we're coming into end of day. How are we coming into end of day, right? We're coming into a bearish. How do I know this? My EMA cloud, my moving averages, the 50 EMA, right? These are all signs that I do not want to long the market. The red team has the ball if the EMA is tilted down. If the cloud is red, the red team has the ball. I want to trade with the team that has the ball. The ball in this case is momentum, right? So price falls below end of day, right? And comes up and retests this critical level. I don't have time to go into this today, but the break in retest is such a phenomenal chart pattern because A, it represents market structure, and B, it's literally a live presentation of sellers stopping out of their trades. What do you mean by that? Real quick, you have buyers stepping up here, right? Very simple analogy here. Buyers step up here. We know this because there's a wick, right? This wick represents buyers pushing back into the market. Now, as sellers overpower price, these buyers that got into the market right here, well, they're now in losing trades, right? Those trades didn't work for them. We've all been in losing trades. How many times when you're in a losing trade that your position size or your equity comes back to you, what do? Oh, God, if you'll let me get my money back on this trade, I swear I'll get out. What do? You exit your position, right? Well, there's also another reason why that happens is this level has so much liquidity where large money probably purchased probably 100 million shares here. So they can only exit that position at areas with massive amounts of liquidity. So that's another reason why when you see a bearish break and retest at end of day and you are trending down, it's a very, very good reason to take the market short, right? And then you would use your stop loss or you would use your EMA cloud, your 50 or market structure as your stop loss, right? Once again, what are we doing? We're playing large money's decisions at pit numbers, right? Price comes into end of day, take the market short, bam. Look at how price just sunk, right? Why did it sink there? Because there's a very large and violent seller at this level, right? Once again, the pit numbers, you have to use them, right? So guys, I hope this lesson kind of sheds light on pit numbers, the principles, the precepts behind it. why they work the way they do. When I first started trading pit numbers, it really revolutionized my trading. And it all started from trading SPX and just looking at gap fills and then just digging, right? So the Bible says if you search, you find, right? So go search, go dive a little deeper, right? Try to figure out more about these things, right? And always stick to what works for you. I'm Joshua Salvetti. Hope you guys like this content. If you want to join the team, hit the links below.